Okay, we are starting our live half hour with the Readers to Leaders Club. My name is May Dodolau, and today we are talking about the key principles of the great financial masters. And again, this is from the book The Value Extractor by Dr. John Demartini, which we are reading in our group. And if you are interested in joining, you can go on Facebook and look for us. We are the Readers to Leaders, a book club for empowerment. And I do all my calls also. We do it as a live hangout. And you can always join by going to our Readers to Leaders Facebook page to post the link. So, welcome to the live call. Now, I know it was last minute notice, so many of you might be catching the replay, which is also fine. We're going to be talking about, we've been talking about this one chapter for 4 weeks now, and that's because it's on financial freedom, which I'm particularly interested in. So I'm being very biased here and sticking to one chapter for a long time because I'm actually working the principles and the exercises in the chapter. So I encourage you, if this is your interest, if you're interested in financial freedom and growing your financial wealth, that you also do the exercises that we go over every week and grow your financial freedom as well. So today I wanted to talk about the key principles of the great financial master. So let's get into it right now. The financially wealthy pay themselves first, but the financially unwealthy pay themselves last. So whenever you receive any money, make sure you put either a minimum amount or some percentage of it, whichever is greater, into your savings and or investment account or into other investments. So that's the first principle. This one is a very, very important. When I first started learning about money, I learned about this principle because most everybody talks about it in all the money books and everything out there. They always say you have to pay yourself first. It's one of the first principles for anything. Everywhere says it. Okay. So what does that mean? You have to pay yourself first. Pay yourself first means you have to give yourself money. You worked for it. You get to save it. That you understand? That doesn't mean give it to you and you go crazy. It means you save it for yourself. You save the money. You put it in a bank account or an investment account or somewhere where it's yours and you can have the money work for you. So the financially wealthy do that. So every time they get paid, they take something out and they put it aside in their own account. Now the poor don't do that. The poor take their money and they spend it, right? They pay themselves last. Okay, so if they have a retirement account, they will put money in it after they pay all the bills and after they pay other people. Okay, because they don't value themselves. Right? I didn't used to value myself in terms of money. I didn't. I paid everybody else because I thought they were more important than me, you know? And then finally I realized that I'm more important. And I'm the one who has to look out for myself because I'm me. So I have to put aside money for myself. And in reality, you know what's more important? It's just that I have to truly value my own value and put money aside for myself. Really, that's all it was down to. So think about it for yourself. If you're not doing this, then you're probably not wealthy. I mean, it's just true. You're probably not. I started doing this in 2009, I think, around then, or 2010, something like that. And that's when I started doing this. So I didn't do this for a very long time, only like 4 or 5 years so far. However, it makes a big difference. When I started doing this, I started becoming wealthy. I started on the road to wealth instead of on the road to poor, right? Because you're always moving. You don't really stand still in life. You're going up, going down. Excuse me. There could be moving to stay in the same place, which, sometimes we do sometimes. Anyway, so go ahead and do that. What I did for me was 10%. Right? And recently I changed that. I changed that just this past week. So now I save more than 10%. In fact, I used to save 10% per paycheck. Now I'm saving double that. No, triple. 1.5 times that. Okay, something like more. I'm saving more than 10% now. I just graduated to a higher amount, and I now put it aside weekly instead of twice every bi-weekly with my paycheck. I put it in weekly. Okay. Number 2, pay your personal taxes. By the inch is a cinch, by the yard it's hard. Trim your tax payments down into smaller times and sizes so that you make sure they I've heard stories actually of people who haven't paid their taxes, and not paying your taxes is one of the worst things you can do, because if you don't pay your taxes, you never get forgiven on that. So say you decide to declare bankruptcy one day because you're so far behind your debt, well, that you cannot declare bankruptcy of your taxes. What that means is that you will always owe your taxes. Even if you declare bankruptcy and clear all of your debts, you will always owe your taxes. Always. You never can clear a tax debt. Tax debts remain forever. So what that means is that you better freaking pay your taxes, okay? The way I look at it is it's an honor to pay taxes, because if I'm paying taxes, it means I make money and I'm contributing to society. So it's an honor to pay taxes. So he's saying that since you gotta pay taxes, it's a must. You have to pay them. Then save money to pay them. So a lot of people just, if you're working a job, it automatically gets taken out of your paycheck oftentimes. So that's fine. However, if you have a business and you're not putting aside money for taxes, it's time to put aside 30% of everything you earn into a separate account for taxes. And so I just started doing that last week for my business. So first time ever, I started a tax account, and I put away 30% of everything I earn goes into that account. Okay. Pay all of your payables according to priority. Prioritize all payments and stick to that set of priorities no matter what. When you manage your money wisely, you receive more money to manage. Pay your budgeted personal lifestyle bills according to priority. Pay your business taxes by priority. Pay your budgeted business bills according to priority. Okay? So what does that mean, pay all payables according to priority? It means anything you have to pay, like your bills, anything that you're supposed to pay it according to priority. So prioritize things, right? So you've got rent, food, maybe you have to pay for things for your baby. Those are obviously more important, right, than maybe a gym membership or Starbucks coffee or things that aren't as important. Okay, so pay for things that are important first, and then things that are less important you pay second. The third and fourth and fifth. Oh, excuse me. Instead of just paying bills as they come in, actually think about, actually think about which ones are most important and pay those first. Okay? Keep your money flowing if you would love to keep it growing. Keep investing. Okay. So you want to keep growing money, right? Because you want to be wealthy. That's why you're on this call. So if you want to keep growing money and you want to be wealthy, then you're going to have to do something that's really important. What is that? You're going to have to invest it. Okay? So when you get money, you have to save it, right? You have to make money, okay? So keep the money flowing. As the money comes in, you're taking aside money, putting it aside for you, and then you have to invest it. So investing money means you take the money and you put it into something that will have it grow, okay? So maybe it's a business, maybe it's a property, maybe it's stocks, bonds, a CD, a savings account, something that will grow your money. Invest your money. Okay, so you got to have your money flowing. It has to be going out. Not. I think what he means by flowing is invest. It doesn't exactly say go and invest your money. Don't leave it there sitting under a pillow. It has to move. It has to. If you want it to grow, it has to move. It has to go invest. Okay. Appreciate a challenging upbringing when you may have undergone financial struggles. A challenging background makes you hungrier to earn what you receive. As we've seen, challenges create voids that then create values. The greater the challenge, the greater the void, and the greater the value. Okay, so appreciate a challenging upbringing. So say that you had a hard time when you grew up. You were always poor, your parents always complained about money, and you never had enough. And so maybe you're bitter about it, or you're upset, or maybe you live in a country where there's not a lot of money, and you make an excuse. You're like, oh, I'm from this country, and I'm not from America where everyone's rich. By the way, everyone is not rich in America. Just telling you. However, you might believe that, right? You might be like, oh, I'm from this poor country and I'm not as rich as you from your rich country. Okay? Or maybe you're like, oh, I'm from a poor family and I just wasn't born into money like you. And I had to go through a lot of hardship. Maybe I had to, you know, I had to work as a child. Or I had to take care of my sisters and brothers when my parents went to work. Or I had to, eat only soup every day. And we didn't really have real food because we had to eat soup. Whatever it is, right? Or I didn't have money to go get anything that I wanted like other kids. I had to go to street home and eat what we had at home. I wasn't even having money. Whatever your story is, okay? Whatever your story is about money, be grateful for it. Especially if you had a hard time or are having a hard time. Because if you are having a hard time with money or had a hard time with money, that means you're going to be more motivated to become wealthy. Why is that a good thing? Because it's not easy to become wealthy. It's actually not like it's going to happen right away. It's not simple. It takes time and effort to become wealthy. So if you think it's going to be easy, then you're going to stop doing it. Once you start doing wealth principles, you're going to stop. You're going to give up. Now, if you have a good story, if your life is hard and you really, really want to change, you're going to be more motivated. So for me, I had this point where I lived in this life and I was so poor, I said, I always just had just enough, right? Just enough to eat. I didn't even live in a nice place, I had barely enough to eat, if even. Sometimes I didn't even have money to eat, right? And then I finally understood why Chinese ask each other, are you hungry? Did you eat? Because sometimes people don't even eat. And then if you didn't eat, they give you a little food because a lot of people don't even eat. For whatever reason. They don't have enough money to eat. They're too busy. They don't think about. What I used to do is I just didn't really have the money to eat. So I would just kind of eat very little, if not anything. I was really poor. When you're poor, it happens. That's what the poor people go through. So because I was poor for so long, I know longer than I've been saving for my financial freedom. Let's put it that way. I got kind of tired of it. I was like, why? I'm sick of being poor. It's obnoxious. It's annoying. I always have to worry about what I'm going to eat, how I'm going to get food and, the rent and whatever. And I live with people who aren't, that I don't want to be around. I have neighbors who are very not good neighbors. And finally, I realized I didn't want it anymore. I want to have money. I don't want to be poor. I want to be wealthy. And I was really motivated because I had been poor and I didn't like it. I didn't like it at all. So I was really motivated to learn how to become wealthy. And then it was all uphill from there. And now it's much easier. It's much easier. In the beginning, it was not easy to save. It was easy to save. I just did it. However, I didn't see it growing. I didn't see the dent made, and I would still be depressed. Is really what it was. I could still save. I would just be unhappy because I didn't feel any different when I started. It took me like more than a couple years before I finally saw a change. And it was a gradual change, so it felt like I didn't feel different. However, I was feeling different. At least I was happy that something was changing. So if you're just starting out and you're in a bad spot, I'm just telling you, you can make it. You can do this. And use your story to motivate you. Use where you are now to motivate you. And I'm telling you this because I know. And it doesn't matter if you live in a poor country or a rich country. It doesn't matter. It doesn't matter if you live in a poor neighborhood or a rich neighborhood. It doesn't matter. You can still do this because a lot of a lot of rich people started out poor, and you know that. You know that for a fact because you hear their stories. And that's so. How did they do it? They did these principles that we're talking about right now. Okay. So if you're serious about your wealth, take these principles seriously and start paying yourself first, and use your story to motivate you. Okay. And be grateful for where you are. Okay. Work in careers or jobs that you truly love, or link whatever job duties you have to your highest values so that you can be inspired and, like Warren Buffett, tap dance to work. Let's tap dance to work, yeah? I read this yesterday. I was like, tap dance to work. I don't do that yet. You know, I really need to work on this one. I do have a job right now. I work for a bank. And actually, my job is pretty decent. And I have found ways to make what I do at my job more fun for me so that I link it to my personal growth. The things I do. If I'm not on target at my job, I think, okay, how can I be more focused, get what I need done in the time that I do the best way that I can. Okay, how do I stay sharp? How do I stay on top of things? How do I make things work? You know, and if I slip up, I ask, okay, how can I make it better next time? How can I avoid this in the future? So I use a lot of what I do at my job as personal growth. So I actually enjoy being there. However, do I tap dance to work? Do I tap to? That is an interesting question. You know, I don't right now. I don't tap dance to work. I don't wake up, you know, dancing and excited and joyful to go to work. I don't wake up upset. You know, I wake up and go to work. You know, so that's something I have to work on. Okay, and they say make it something that you truly love. Well, I'm working now in this internet business, which I do. And if you're interested in that, underneath this video, there's probably a link somewhere where you can find out more about what I do on the internet, which basically involves blogging and doing live calls on the internet about things that I love, right? Reading. I love reading, so that's what I do. Some people, they love other things. They love learning how to make money online. So they have things like this where they talk about, you know, how to blog. I have a friend of ours just put a whole blog together on how to blog and how to make your blog post rank high in Google. So he loves that. For me, that's not my passion. I don't love that stuff. I love reading. That's what I love. So that's why I do these weekly hangouts on reading, because I love it. And do I tap dance to work? Not exactly. However, I'm very excited. I might start tap dancing though now that I have that image in my head. I love it. I wake up early. This is early on a Saturday for me. I'm in Hawaii. I wake up at before 7 a.m. Oftentimes before 6 a.m. to get ready. Today I was a little late. I guess I needed more sleep. So I wake up really early to do these calls and these hangouts because I love what I do. I love reading. I love sharing reading. I love teaching. These are things that I love to do. My high values are family, health, and personal growth. These are my highest values. Personal growth for me involves a lot of reading, and the more I think about it, I think teaching is another one of my highest values. I love teaching people things. I've always loved that. I used to be a teacher, and I always gravitate toward teaching. So that must be one of my highest values too. Can highest value be laughing? Maybe, right? Maybe. Because I love laughing. Anyway, let's move on. We're going to finish this in a half an hour. Why? Because I actually have a yoga class after this. And so it actually keeps me accountable to keep these calls short, 30 minutes. And that's all you really need. I'm just following this book that you can always get. Remember, the book is The Values Factor by Dr. Chianti Martini. If you don't have it, get it and read it for yourself. Take time out for yourself to read this book. Okay. I probably should share a link by the way before I cut. Okay, so if you do want to know more about what I do, go to my blog. It's candoitblog.com. CANDOIT blog.com. Okay. Moving on. So make sure your work is something you love to do. Now, a lot of people listen to that and they're like, no, my work is definitely not what I love to do. Well, you got to put a goal in your head to find something that you do love to do, or make work something you love to do. Maybe appreciate it more for what it is. Because maybe your work is better than you think. That's how it was for me in the beginning. I realized my work was better than I thought it was. I could learn a lot more than I thought I could at work. And then I started appreciating work a lot more and having a better attitude. And then I did better too. Work, 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 serve, 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 save, 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 invest, invest, invest. Okay? So you got to keep working, work, 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 and then you're going to serve. So serve people, help others, serve. That's what you're doing at work, is you're serving. That's why you're getting paid. You're helping somebody else so that they give you money. You're serving them. Okay? And maybe your services serve the world, which makes your company make money so that they can pay you, right? So you got to work, 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 serve, 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 and then save, 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 and then invest, invest, invest. That's the order. Work, serve, save, invest. Okay? Become a global macro visionary. Bring service to the world, like being of service to your highest values. Okay, so right now you probably serve somebody in your job. Okay, let's say that you're a waiter. You serve your customers. Yeah? So he's saying become a global macro visionary and be service to the world. Don't think so small, okay? Think bigger. Now, in actuality, when you pay your taxes, you are helping your country. So you are serving your country. Now, think about the world. How can you be of service to the entire world? So think bigger. Think macro. Think huge. Think beyond your lifetime. That was a new one for me. I just learned last week. Think beyond your lifetime. What do you want your legacy to be? And I was like, think beyond my lifetime. I've heard of that before, however, now I'm going to actually really think about it. Because when you have bigger goals and you're serving more people, you'll become more wealthy because you're offering more value to more people. And so being of service has to be important to you. And if being of service is not, you have to find out what your highest values are. Mine being family, I highly value family, health, and personal growth. You have to link that to being of service. So how do you do that? So you say, how does being of service help my family? Well, when I help people at my job, I make money, which helps my family. Okay, so that's being of service that helps my family so that we can eat and I can give Jordan what he needs and things like that. And so that's how you link what you do to your highest values. How does it help my health? Well, when I serve other people by investing and make money investing, I have more money to improve my health because I can buy better food, right? Or if it's not just me, I can say, well, I can buy better food. I can buy organic food. I can buy the food that I want to eat, fruits that I really love to eat, like cherries, things that are kind of expensive where we are in Hawaii. I could buy that when I have more money. So being of greater service brings in more money so that I can be healthier because I'll have healthier food in my house. You know what I mean? Okay, educate yourself on investing. Warren Buffett had read every book on investment in an Omaha Public Library by the time he was 11. The earlier you begin your studies, the better. If you truly begin to value wealth building, you will build it. That was interesting. I was like, Warren Buffett read every book on investment in Omaha Library by the time he was 11. Okay. That makes sense. You know, now it's starting to make sense. You know, you see these hugely rich people, and like, how did they become that? I want that. Well, have you put in the time and effort? And I look at myself and I'm like, no, I haven't read every investment book in the library, and I'm not 11 anymore. So I guess that makes sense why I'm not a billionaire yet, right? I haven't put in the time, or I haven't put it in, time. I haven't been sufficiently motivated. He was obviously very motivated. He read every investment book in the Omaha Library when he was 11. Okay, you gotta get cracking here, right? So I looked at that and I was like, oh man, that makes sense. You gotta study it and learn it. Study probabilities, statistics, and money management principles. When you truly value investing, you will study it well. Okay, so when we invest money, it involves probabilities, statistics, and money management. So we have to study that. So we have to get books on probability, statistics, and money management studies. So I've been actually reading books on money management. Statistics and probabilities I studied in college. However, have I been studying it recently? No. So I probably have to start cracking open those books. So this will make them more fun. Now that I know it's about money, I'll be more motivated to read them. Mentor others on investing so you will learn by teaching. Okay, so what you learn about investing, start mentoring others of what you do that's successful so that you can learn by teaching. I guess that's what I'm doing right now with these calls. I'm mentoring others on principles, and in turn, doing this makes me learn them better. So do the same. Don't pretend you know everything about investing. Remain humble and open to continue learning. Likewise, don't always think you are right. Pride goes before a fall. Always be open to learning. That's true in anything, money, whatever, relationships. Don't think because you're married you know everything about marriage. Oh my gosh, just think because you're in love means you know everything about love. No way, like so you don't know everything about investing. Even if you do some good investments, you don't know everything about investing. Always remain open and humble to continue learning more about investing. And you're not always right. Well, definitely not always right. Don't venture beyond your sphere of knowledge until your sphere of knowledge extends beyond your venture. Study investments class by class. See, this one is interesting because I'm thinking of buying a property this month, and this made me stop and think. I've never bought a property. Have I learned about it? Yes and no. I've studied a lot about properties. Have I learned about buying properties? I have. However, do I know enough? I've never actually ventured into this class, although I've been outside looking in a long time, and I have been studying it. So I'm like looking at myself, like, I'm ready. Am I not ready? Because this is a whole new class of investing, buying a property. Right now, I just invest in the stock market. So this one to me is like a whole new class, and I'm like, am I ready? Am I not? So I feel like I need to study more. However, sometimes being stuck by analysis paralysis is not good either. So I'm probably just gonna freaking do it because I've been saving for 5 years now, like 4 or 5 years I've been saving to buy a property. So next one, save before you invest and before you speculate. Build a stable foundation so that you're building more sway. So the first thing you have to do is save money before you invest money. So that one's important because we've been taking aside money in our paychecks. However, we haven't been putting it in a savings account per se. We've been investing it. So he's saying you have to actually save it in a savings account, something really stable like a savings account. Keep it there, even though the return is not good. It's like point something percent. Keep it there. So I'm like forcing myself this month to actually put it in a savings account and leave it there. It's like, oh, okay. I'll do it. It's like called liquidity. Be a long-term investor more than a short-term speculator. Stay the course for 20 to 50 years. That keeps greed and fear out of investing. The time in the market is more important than the timing of the market. Be a patient investor, not a daily trader who seeks immediate gratification. When I first started trading, I was kind of almost a daily trader. I would look at it every day and see if I should buy, sell. And it was awful. I didn't like it, and I found out that I was having a job, and the job was looking at my stocks going up and down, and I realized I don't want that job. That's not the job I want. So I became better at investing. Where not that I'm that great at it, however, I got better at it, and I don't stare at it all the time. I kind of do it more long term, like they say. I'm in it long term. I'm not in it short term anymore. Know the downside as well as the upside of each investment. When you live according to your highest values, you will embrace both sides equally. Maintain discipline. Avoid chasing fads or following fashions. Be a principled and disciplined investor, not a gambling, opportunistic one. A lot of people do that. Oh, this is the latest and greatest stock. Buy it, buy it. That's totally following fads. Okay, so make sure you use a financial advisor or at least do some research before you just jump into things. I'm kind of extremely conservative. I don't buy many things anymore. Anyway, I'm always learning. I'm open to learning about investing. I'm not expert. Stick to the fundamentals. Markets regress to a mean regardless of cycles. What that means is that markets go up and down. Stick to fundamentals in investing. Okay. Which the fundamental that I know is buy low, sell high, and then I guess another fundamental is don't be a day trader. Stay long term. Go into different classes of investing. Make large, significant investment decisions only when you are certain that markets are at extremes, generally every 5 or 10 years. The average market cycle lasts between 5 and 10 years. At those points, be a contrarian. Every manic has a panic. In other words, when the market is at its peak during the so-called bubble, that is usually a wise time to sell, even while everyone else is buying. When the market is at its lowest during a crash, that is usually a wise time to buy, even while everyone else is selling. Okay. Wait until you can see a great bet. Patience is wisdom. Buy and hold value with patience. Diversify to reduce volatility. Don't put all your eggs into one basket. Even if it is your own company, select a few investments, and hedge your bets. Balanced portfolios become timeless. Unless you are an investment specialist, consider buying the whole haystack in an index rather than spending time and money searching for needles. An index is a collection of stocks bundled together by a financial firm. It's generally held for at least a year, enabling you to take advantage of long-term capital gains. If you don't understand these terms, you're going to have to study more finance books and learn them. You need to know this to be an investor. Seek low-cost index fund investments to keep the costs of investing and trading down. Performance isn't the only thing that counts. The expenses are often just as significant. Beware of overpriced, highly volatile, unregulated hedge funds. Work your way up the investment class spectrum, not down. Earn the right to risk. Beware of unrealistically thinking that you will pick only winners or stocks that only rise in value. You will pick at least some losers as you invest. And you must budget for that. This is why I advise progressive investment. When your wealth is small, invest conservatively in an interest-bearing account or a CD. When your wealth is greater, invest it in an index or mutual fund or some other form of stock accumulation that hedges against risk. When your wealth is greater still, you can take greater risk, because you will have a financial cushion to soften the blow of the inevitable losing stocks. Invest in companies that are managed well. People make the difference. Beware of forecasts, predictions of the market. They can be biased gambles. Remember that the people who make the predictions have their own biases. Concentrate your efforts on what you can control, notably keeping costs and taxes to a minimum. That one's important. You can actually control how much you spend, right? So you can control that. So you can minimize that, and you can control your taxes as well by properly filing, doing your deductions properly, registering your business, doing things like that. Master the science of asset allocation. Keep to the big picture and to your overall investment strategy. If you are continually buying and selling, you raise the cost of investment. Every time you buy and sell, you pay a fee, right? You are able to hold on to your assets longer. You benefit from capital gains. Over a year, you can benefit from capital gains. Sometimes you need to move your assets around to respond to a change in the market. If you master the science of when and how to do this, you will save yourself money in the long run. I was thinking of long-term return. Not capital gains. I was thinking more in terms of you hold your stock longer than a year and then sell it. Then you have different tax consequences if you hold it for less than a year. Review and rebalance your investment portfolio after each year to maintain your asset allocation according to your strategy. Work with an advisor to determine the strategy that makes sense for you. And make sure you decide rather than allowing the market to do so. Don't let your portfolio drift. Have your advisor explain the plan to you and make sure that conscious decisions are being made for every investment. Okay, I'm guilty. My portfolio has been drifting. Maintain some liquidity and be conservative. Don't ever lose sleep over trying to gain a few extra percentage points. It is better to take fewer risks and feel more confident rather than taking big risks that will keep you up at night. Keep plenty of liquid cash on hand so you can respond to emergencies and opportunities as they arise. What the wise man does in the beginning, fools do in the end. Hedge against all extreme outcomes. Big biases can destroy portfolios. For example, if your bias is towards tech stocks and you have not balanced your portfolio, you are vulnerable and likely to lose a great deal and destroy your stock portfolio when any tech bubble bursts, as it did in the 1990s. If your bias is toward real estate and then the real estate market crashes, you could destroy your portfolio unless you balance in some investments in other areas. Know the risks and dangers of leverage. Leverage is a financial term for any technique used to multiply gains and losses. For example, if you wanted to start a business, you might leverage the value of your house by taking out a mortgage on it and using that money to start your business. Now your house is even more valuable than it was before because it is both a valuable piece of real estate and the foundation of a profitable enterprise. However, as you can see from this example, leverage poses risk as well. If your business fails, you might also lose your house. Leverage multiplies your potential gains. but it also multiplies your potential risk. Understand leverage thoroughly in your business dealings and take no unnecessary risk. Set realistic expectations and lower your unrealistic expectations. Beware of overzealous returns. Factor in inflation to determine real returns and real wealth. Over the long term, currency movements cancel each other out, so keep an eye on foreign investment. Develop an investment team. Use debt sparingly, if at all, and only if with long-term, low fixed rates, and if your debt produces more than it costs. For example, suppose you borrow money at 6% a year to start a business that in 3 years has a return on investment of 24%. Because your business is bringing in far more than the interest rate on your debt has produced more than it costs. However, if you borrow money to buy a car or put some new clothes on your credit card, your debt is costing you money, and it is not producing any money. Unless your new car can truly be demonstrated to assist you in making you more return on your investment than the car loan cost. Consumer debt is one of the reasons that many people find it difficult to get ahead financially. They're spending money on debt that does not produce any income. Be reasonably calm and prepared for ups and downs. That is just the feedback that the market is giving you. Develop creative capitalistic mindset that include accountable philanthropy. Philanthropy can be meaningful, very meaningful use of your money. Philanthropy means charity, but it must be accountable philanthropy, whereby the money that is distributed makes recipients accountable, responsible, productive, and dignified, rather than fostering dependency, irresponsibility, and shame. So that reminds me of a question I got recently on an ad I put up about my internet business, where they were like, why don't you just give me the money so I can do this business? And I told them that if I just gave I told them to start with the fisherman and the fish, You just give people fish, they never learn how to fish themselves, and they become dependent on you for fish. If you teach them how to fish, they go out and fish for themselves. So spend the time and resources in teaching people the skills they need to become what they want, instead of just fostering them. Okay, that's it for today. I went a little over. I got to end the call now. I hope this was valuable to you. It was valuable to me. I've read this list 3 times in the last days, and I'll probably read it again and again because I think it's really important for myself. So I hope you gain value out of it as well. This is from the Values Factors by Dr. John Demartini. If you want a written version of this list, I'm going to put a blog post up about it. Probably not right now, however, by the end of the day. Candoitblog.com. That's CANDOITBLOG.com. I'm going to put a post with all these principles in it so that you can refer back to it. Okay, have a wonderful day. Thank you for joining us, Readers to Leaders, and see you next week, same time, Saturday, 7 a.m. Hawaii Standard Time, 1 p.m. Eastern Standard Time. Aloha.